Okay, well, we've had some key earnings coming out this morning. General Electric exceeding estimates, but with profit down 45% from a year earlier. Also, Bank of America posting a $1 billion loss and missing analyst estimates, raising some more concerns about B of A. Joining me now is Bob Dahl. He's the Vice Chairman and Global Chief Investment Officer of Equities at BlackRock. And Bob, good to have you back on the program. It's been a while.
Happy Friday.
Happy Friday, although I wish I could say the same for the stock markets right now. Okay, we had a lot of earnings this week, but the earnings this morning from GE, from Bank of America, from Google last night, what are they telling you about about where the markets are and where the economy is?
Well, in general, earnings so far in the third quarter have been pretty good. More positive surprises than is typical, and the source of that has been both, yes, more cost-cutting results, but also glimmers of hope about the top line. And we've gotten some guidance, not a lot, but some guidance that the world's looking less bad, if not even a little bit better than it did. It's not uniform. GE and Bank of America this morning a little on the disappointing side, but by and large, reporting season to date, pretty good news.
But isn't it kind of early to say that, though, because we've still got quite a few to go on the earnings front. It's a little bit early to say that top line growth is going to be strong.
No, I didn't say it was strong. I said there were glimmers of hope by several companies in the report so far that they've been better than expected. I'm not making the case top line growth is strong.
Okay.
Bob, it's John Erlichman. The Dow obviously back above 10,000. I know you're supporting the case for bigger cap names or some of the better known names after the rally we've seen. Do you think the Dow will hold above 10,000?
My guess is it will. I think the path of least resistance is still to the upside. A lot of skepticism on the sidelines, a lot of cash on the sidelines, and the fundamentals, 2 steps forward, 1 step back, slowly but surely getting better. Doesn't mean we don't have a lot of problems. They still lurk out there, but the cyclical positives are still weighing in and we think pushing the market higher.
Hey, Bob, it's Adam. Do you just stay with the names that have worked? In other words, don't try to buy the guys that are down. Just play the momentum, for lack of a better word.
Well, I don't know that I'd necessarily do that because that can obviously get you into trouble if something goes in the other direction. Momentum has certainly been, at least until recently, in the camp of the junkiest of the junk companies. And I want to have a broader, higher quality portfolio, which means you buy some things that have been less in the forefront of the gains. Most industries, if you look at the valuation of the high-quality company, it's the same as the low-quality company. That's rare. You don't have to pay up at all for quality, and I think that argues for having a quality portfolio.
Bob, I want to get back, though, to the results that we've seen so far this week. And as you said, you're seeing glimmers of hope right now. But are you seeing anything different between the financial companies that have reported and the non-financial companies?
I think the honest truth is they are both mixed, and we've seen in the industrial side some good news. Intel's one that comes to mind. We see some question marks. GE's energy business, for example, in the recent release. On the other hand, in financials, we see J.P. Morgan earlier this week having really good news. We have Citicorp a little more questionable. So I still think we're in that mixed period, which is not where we were. We were in a period where virtually everything was bad, and slowly but surely through the quarters, things are improving.
Bob, you like energy, you like healthcare, you like some of the technology names. Are you cautious on bank stock performance now?
Yes, we would be cautious and underweight the financial sector, including the banks. Our view is a slow growth economy with low nominal growth means some people are not going to be able to pay their bills, and therefore we're going to have some more bad credits down the line. We think many of these companies are selling on, can I say, normalized 2012 earnings. That's pretty far down the line to be able to see. And then we're going to have financial reform. We already know the restrictions on leverage. That's going to limit the ability of return on equity, return on capital to come back to normal. So we're underweight the financials.
Okay, Bob, on that note, we've got to leave it there. But thanks so much, Bob Dahl of BlackRock.